Greetings, ladies and gentlemen. Welcome. I am the Crypto Crow, and today we're going to be talking about what the cryptocurrency space could very much look like in a conservative controlled White House in 2025. And that's basically a big, there's a lot of big questions related to what would happen to the SEC, what would happen to the CFTC, what would happen to the way cryptocurrencies are regulated and licensing and all sorts of things. And we're going to dive into a book that is basically it's ultimately this huge book. It's called Mandate for Leadership, The Conservative Promise 2025. This is basically a breakdown of over 400 different people, economists, former elected officials, all these different people, and what they propose to do to change the way things are operating across all parts of the country and in all areas. But specifically, we're going to be focusing on what they propose to do to change the way we manage cryptocurrencies, the SEC, and other financial regulations. So stick around. We'll be right back. You're going to want to see this. It's going to be very eye-opening.
If it's bull or bear, I don't care. It's quite a rough ride, just like life. But I'm kind of patient, 'cause only time will tell. It's gonna
I don't know what just happened there. Anyway, welcome back. Thanks for joining me. And first, I wanted to say I had an amazing time this weekend at Karate Combat. Probably the best Karate Combat event I've been to yet. I mean, just the action, the drama, everything that happened. It was absolutely amazing. I went with some friends. I took obviously my wife, my stepson. We met up with Mona, and we just had a really good time. I ran into JC Chains, had a big talk with him about his recent fight. And I actually posted a whole kind of a behind the scenes video on my locals. So if you're interested in any of that, kind of like what's it like to be me at an event like this, it's kind of interesting. I gave Mike, I can't remember his last name, but the guy from like the Logan Paul, he does the commentary. He was giving me shit about an 11-year break, so I was giving him shit. He was pretty cool, man. So yeah, if you're interested in that kind of thing, definitely check out my locals. I've got a lot of stuff coming to my locals account very soon. I've been working on it since yesterday. I mean, a whole bunch of stuff that's coming. So those of you that have subscribed already, thank you so much. A lot is coming. And to those of you that haven't, you might want to check it out. Let's go ahead and start diving into this. This isn't going to be terribly long, but it's going to be very eye-opening for many of you that are curious about what the plans might be. You know, I don't know where we're going. I don't know what's going to happen during the election. This is a completely bipartisan, whatever happens, but I don't know of anything like this that exists for the Democrats. So if there is something, let me know. I'd love to read it. I'd really love to read it. I would love to read if there was something like this before the 2020 election. I'd love to read that and see how that played into what they actually did, so that we kind of get an idea as to what might be expected moving forward. So yeah, any of that stuff, let me know in the comments, because I am really all about reading all of this stuff and diving into it and then sharing my opinions about it. So we're going to take a look at this book now. This is Policy Agenda. This book is an invitation for you, the reader. This is basically like a recruiting thing. I don't care to recruit anybody. This book is the product of more than 400 scholars and policy experts from across the conservative movement and around the country. Contributors include former elected officials, world-renowned economists, and veterans from our 4 presidential administrations. So this is a really big deal. And ultimately what this is it's kind of a proposed playbook for any president. So any administration that goes into office is going to get a copy of this, and it presents all of the things that they propose be changed during that administration's term. And there's a lot in this book. Okay, so just so you know, we're only going to cover the stuff relevant to what is going to touch on cryptocurrencies and SEC and things. I think that's the most important thing to most of us right now. So we're going to dive into this. And I would say we're 5 minutes in. This will probably be a 20-minute video, just so that you know. It's not going to take a really long time. So Securities and Exchange Commission and related agencies. The Securities Act of 1933 and the Securities Exchange Act of 1934 reflect nearly 9 decades of rushed and haphazard amendments. The securities laws are now extremely complex and do not constitute a coherent, rational regulatory regime. For example, the current SEC has proposed a climate change reporting rule that would quadruple the cost of being a public company. It's insane. This would have a substantial adverse impact on existing companies. Over time, it would also substantially reduce the number of public companies and therefore the number of investing options available to ordinary Americans. The Securities and Exchange Commission should be reducing impediments to capital formation, not radically increasing them. We've been seeing some of this stuff kind of play out as well with the banks. It's in a way, there's a lot of stuff that's happening that's ultimately dwindling the number of banking institutions that we can rely on and use. So I think there's something to that, and I don't understand the overall agenda of it, but it just seems to be the way of that force right now. The SEC needs to be reformed to achieve its important core functions more effectively, to improve transparency and due process, and to reduce unnecessary regulatory impediments to capital formation. I'm going to see if I can reduce this a little bit in size because it's so big. Well, I guess I can't. It's so big, it's difficult to read because I'm reading this on a humongous monitor. So it's almost like I'm reading a movie screen, which is, it's kind of throwing me off. Sorry. With regulatory authority delegated to the, here, I can show you, I'll show you what I'm talking about. I've been playing around with my stuff recently and, I guess maybe I'll have to show you on the, I'll have to show you when I minimize this, but I have a second camera going. I'm going to show you guys because I'm going to try and do some cool stuff with it. With regulatory authority delegated by the government, both the Public Company Accounting Oversight Board and FINRA have proved to be ineffective, costly, opaque, and largely impervious to reform. To reduce costs and improve transparency, due process, congressional oversight, and responsiveness, PCAOB and FINRA should be abolished, and their regulatory functions should be merged into the SEC. So they want to make the SEC ultimately bigger, but reduce a lot of the bloat and other elements of these agencies that don't seem to be doing very much, but costing us a lot of money. Furthermore, Congress should establish an independent board or commission and charge it with producing a detailed report within 18 months that examines the degree to which the regulatory functions of the various other so-called self-regulatory organizations, or SROs, which are no longer self-regulatory in any meaningful sense, should be moved to the SEC. So ultimately, they want to basically just consolidate everything into the SEC as it relates to that regulatory board. Simplify and streamline Regulation A, the small issues exception, and Regulation CF for crowdfunding, and preempt blue sky registration and qualification requirements for all primary and secondary Regulation A offerings. For those of you that don't know, Regulation A is pretty much like seed capital funding. And in a sense, it's kind of like crowdfunding, but on a private level, and generally only within like accredited investors. And so it's very difficult for these companies. It's getting more expensive and difficult for a company to go public to begin with. But even before going public, you might have like a Regulation A or a Reg A capital raise. And it's basically just a private capital raise amongst accredited investors. So, and we see a lot of these in crypto, and it's very normal. But oftentimes a Reg A seed offering does involve securities for the most part, because you're ultimately buying, an equity interest, or you're buying something that is definitely relevant to. It's funding the initial operation of that company's growth early on, hoping to get a significant return later down the road. And then, of course, you've got the regulation crowdfunding. Either democratize access to. Sorry, scrolled too fast. Where are you at? Okay. Either democratize access to private offerings by broadening the definition of accredited investor for purposes of Reg D, or eliminate the accredited investor restriction altogether. Personally, nowadays, and I'm going to tell you right now, when we get to the bottom of these notes that I've highlighted, I think you're going to see I'll just tell you, oh yeah, there's my, you can barely see it, but I'll have to move that at some point in the future, but yeah, I'll show that later on. What I see being formed here in terms of policy and proposed changes is ultimately the support for a new trading system like the NASDAQ. Okay. Now, what do we know? Well, it's interesting because this is a conservative line out of everything that they would propose to have changed in the upcoming administration. But we also know that BlackRock and some other groups are already starting, establishing a new trade desk, a new trade platform in Texas to compete with the NASDAQ. And I know that they've also talked about beta testing and testing 24/7 trading, much like a cryptocurrency exchange. We also know that Larry Fink has been talking often about real world assets, the tokenization of real world assets, the tokenization of stocks and things. So it looks to me like they want to build a 24/7 trading platform where they're basically everything is controlled, much like NASDAQ and the like. And it's not just one of these other exchanges like the Coinbase or the Binance or the whatever, but it's something that they have direct control over as it relates to a lot of the different initiatives and things that they want to ultimately rise in power, right? Which some of this is in support of that. And then some of these things are against some of that, which you're going to see. It's very interesting when you're really paying attention to what's going on. I consider this kind of behind the scenes. How many of you have even heard of this book? I was actually tipped off to this book by somebody on Twitter, and Lou, we'll just say hi, Lou. Thanks for the tip, brother, because you put me onto something I found extremely interesting. So anyway, we're going to dive a little further and then we'll talk about it more in the end. Allow traditional self-certification of accredited investor status for all Reg D Rule 506 offerings. Personally, I think the accredited investor thing should be just gone away with altogether. If somebody wants to gamble, you don't need to be an accredited investor to walk into a casino and drop $50,000 on black on a roulette table. Why do you have to be an accredited investor to invest in a company, or at least have the option to really generate some form of wealth? Maybe the company doesn't do well. And I know also, just like in crypto, a lot of the venture capitalist groups, they go into like 35, 40 different projects, expecting the majority of them to basically go away. And then the profits and the rise up of a handful of them will outweigh the losses that they suffered in any of the other projects, right? That's just kind of the investment game. So, and to some extent, you're saying, well, an accredited investor is going to make a much better educated decision as to where they put their money, because maybe they can only afford to invest in 1, 2, or 3 companies as opposed to 35, and basically hedge their bets and basically spread and distribute their investment over a lot of different companies or projects. So a lot of these big and accredited guys have more money to throw around, and therefore they can afford to lose it, right? So I get some of the argument associated with an accredited investor, but nowadays the way that the climate is changing and moving more towards crypto, where people are able to get into a lot of these projects for $100, and there are a lot more people today that are able to basically invest $100 into a handful of projects than just like 1 or 2. And I think the more power you give people with the means of doing this sort of thing, the more likely they are to further educate themselves on how to do it properly. Sometimes you're going to lose. Like most of us that got into crypto in 2017 learned a lot of valuable lessons, riding that peak all the way down. So sometimes you just have to have that education of hard knocks where you're learning the hard way, and then you understand and you learn how things really work, and then you start making better decisions from there. Exempt small micro offerings from registration requirements. Exempt small and intermittent finders from broker dealer registration requirements and provide a simplified registration process for private placement brokers. Exempt peer-to-peer lending from federal and state securities laws and reduce the regulatory burden on Regulation CF debt securities. Market the Title I Emerging Growth Company, EGC, not ESG, don't get it confused, exemptions permanent for all EGCs. Reduce the regulatory burden on small broker-dealers and exempt privately held non-custodial broker-dealers from the requirements to use a PCAOB registered firm for their audits. Some of the stuff I didn't find relevant. Preempt blue sky registration, qualification, and continuing reporting requirements for securities traded on established securities markets, including a national securities exchange or an alternative trading system. We're getting into page 832. 832. That's where all this stuff is found in that book. Congress should prohibit the SEC from requiring issuer disclosure of social, ideological, political, or human capital information that is not material to investors' financial, economic, or pecuniary risks or returns. The proposed SEC climate change rule, which would quadruple the cost of being a public company, is particularly problematic. Repeal the Dodd-Frank mandated disclosures related to conflicting minerals, mine safety, resource extraction, and CEO pay ratios. Oppose efforts to redefine the purpose of business in the name of social justice, corporate social responsibility, stakeholder theory, environmental, social, and governance, ESG criteria, socially responsible investing, sustainability, diversity, business ethics, or common good capitalism. Basically, oppose the efforts of the World Economic Forum. It's basically what this boils down to. All of these efforts are somehow related to, like, Larry Fink, BlackRock, the World Economic Forum, and ultimately the liberal agenda. And so this is no surprise that I would see something like this in here. I'm not saying I don't disagree with it, or I do disagree with it. It's not a surprise that it's in here. Prohibit securities regulators, including SROs, from promulgating rules or taking other actions that discriminate either favorably or unfavorably on the basis of race, color, religion, sex, or national origin of such individual or group. And I would throw political alignment in there as well. Let's be real about it, because I don't think there's ever been a time more divisive than today. And, the political alignment seems to either garner a significant amount of favor or detriment, depending on what side of the fence you're on. And I think that should not be the case in anything we do. Ensure that any 3 SEC commissioners are empowered to place an item on the agenda to receive adequate staff support to do so, even without the chairman's support. Absolutely. Because as of right now, the chairman has pretty much all the power and can dictate just about anything. And they're basically saying, no, this should be a 3-headed horse, not a 1-headed horse. Congress should require an inspector general an inspector general's report regarding SEC information technology spending and contracting. Spending appears to be much too high, and IT contracting is poorly managed, which, if we're to believe the story that, announced the ETFs, how that happened like a day or two early, accidentally on Twitter because the Twitter account of the SEC got hacked. I'm not sure I buy that, but it's obvious that if that were real, that should have never happened. And so, IT contracting is obviously poorly managed if that was true. Statutorily limit the time for an investment to 2 years with no extensions. Oh, I'm sorry. Statutorily limit the time for an investigation to 2 years with no extensions. Long investigations harm private parties and the quality of justice. With adequate management processes, the SEC should not need more than 2 years, even for complicated matters. Okay. Now, we're getting into some of the nitty gritty here. The CFTC Administration and improved commodities and derivatives markets. This is one of the sections I find the most telling as to how the governments truly do look at cryptocurrencies. Modernize the definition of commodity, which is now largely a laundry list of agricultural commodities, and clarify the treatment of digital assets. So it's not until the CFTC is discussed in this proposed book of policy changes, the digital assets is even acknowledged or even mentioned. Clarify through an express amendment to the Commodity Exchange Act the circumstances that require a foreign swap trading platform to register with the Commodity Futures Trading Commission as a swap execution facility under sections 2I 27 and 5H 28 of the CEA. Currently, it is not clear whether having one or a small number of U.S. participants would require SEF registration under prior staff guidance, which has led foreign swap trading platforms to exclude all U.S. persons from their platforms or to go through the process of seeking an exemption from registration. And we see this all the time. We know this is exactly what's been going on, and it definitely needs to change. A lot of exchanges, a lot of platforms, they don't want to deal with U.S. traders or U.S. investors because they don't want the baggage that comes with it, because they don't want a regulatory body knocking on their door, fining them for doing nothing. Ultimately, and that's basically where we're at with that. And the proposals are basically saying this needs to change. Digital assets. This is close to the end of this. Both the SEC and the CFTC have been irresponsible actors in the digital asset area. They have had more than a decade to promulgate rules governing digital assets, yet the SEC has utterly failed to do so, and the CFTC has provided only minimal guidance. Instead, both agencies have chosen regulation by enforcement and have done it poorly. They neither adequately protect investors, FTX, Celsius, I could go on, nor provide responsible market participants with the regulatory environment that they need to thrive. The SEC and the CFTC should clarify the treatment of digital assets, coins or tokens. Specifically, they should promulgate a joint regulation providing that a holder of digital assets may not be deemed a party to an investment contract or an investor in a common enterprise unless, while the enterprise is a going concern, the holder is entitled to a share of the earnings or profits of the common enterprise or a defined flow of payments from the common enterprise in consideration of the investment, or unless upon liquidation, the holder has rights against the assets of the common enterprise. Otherwise, the digital asset shall be deemed a commodity to be regulated by the CFTC, not the SEC. And that is clear cut. That is as clear and dry as you can get with that. Amend the definition of commodity to include digital assets that are not a security as so defined, and amend the definition of security to make it clear that a certificate, digital, electronic, or otherwise, that represents ownership of a commodity of commodities and is convertible into a physical commodity on demand is not a security, but a commodity. In the absence of regulatory action, Congress should enact legislation that achieves these goals. And that about sums up the bulk of all of this. So ultimately what we're seeing here is a breakdown of the ways that they want Congress to make these changes. They want the SEC to make these changes. All of these changes are ultimately to be in favor of blockchain and the moving forward in blockchain. And ultimately, I like I always say, I'm politically agnostic to a large degree. I mean, I rule my own sense with common sense. Okay, if it looks super stupid, it's probably stupid. I mean, that's really all I have to say about that. Take that as you will. I look at things and I base my opinions on the merits of what I'm looking at. And then I continue to dive deeper. Now, there's obviously a concerted effort in changing the very way we do business on a financial level. Okay. It's very obvious that countries all over the world are adopting and working on and and they're beta testing and launching all the different CBDC tokens related to all these different countries. And I know that apparently the US has put a hold on it for now. It's happening. I'm telling you, and I've said it a million times, and I don't care what any of these politicians say, CBDCs are coming. And they're going to play a significant role in how the United States operates moving forward. And I honestly believe that it's also one of the reasons why the value of the US dollar is being devalued so much, and why there's so much effort in ultimately restructuring the entire economy of the United States under our noses, veiled as other things, because we're losing economic power on a global scale, and it's obvious that things have to change. Maybe we've seen some of these things coming, like the situation with Saudi Arabia and Russia and China. Maybe we're seeing all of those things, and what we perceive to be liberal policies that are tanking the country are actually potentially things that we're trying to I don't know, so don't hate me. Whether you're conservative or liberal, don't hate me. I'm always just trying to make sense of things, because I find it difficult to believe that this side are just truly evil people trying to basically imprison all of us with, insanely higher taxes for no reason, and stripping all of our rights away, and they're all bad, gathering around in the woods doing crazy shit. I don't know, man. I don't know what's true. But I find it very difficult to believe that that's true. I find it difficult to believe that being the case. And in the flip side to it is, now, I will say that a lot of stuff that's happening with the former president is pretty evil, honestly. I mean, maybe evil's an overstatement, but pretty dastardly. I mean, to be honest, let's be real. But at the same time, I look at what's happening with, the conservative side of the political reign, and I'm like, I'm not quite sure I buy into what a lot of they are pushing either. I mean, because when Trump was president, he did nothing for crypto. And in fact, instituted a lot of the new taxes related to crypto. So he kind of screwed a lot of us when he was in office. Now, I've also said that, at the same time, he didn't really know anything about it. He just saw something that was making a lot of people a lot of money with little reason behind it, and they should probably tax for the privilege of being able to do it. And then, we transition in 2020, and then all of a sudden we're just constantly at war with the regulatory bodies that are, ruling by enforcement, enforcing by enforcement, like whatever you want to call it, but ultimately making it very difficult for US-based companies to innovate and make progress in a space that is ultimately being challenged by everyone in the world. And we don't want that. We want to be able to have US-based corporations, US-based blockchain projects be able to launch, innovate, launch their projects, get capital that they need to build and achieve things. I do think that there needs to be a lot more transparency in this. I do believe that I believe that, honestly, I hate me if you want, I'm all about the decentralization of blockchain, 100,000%, but I'm not about undoxed development teams, which I know some of them use the SEC and the, ruling by enforcement and all that kind of stuff as a tactic to say, well, we don't want to be doxed because we don't want to be a target of some crazy, they're going to start, sending us Wells notices, and they're going to go after us and all this. We don't want to deal with that. We're good, honest businessmen. We just don't want to deal with that. I get that to an extent, but if you're asking for millions of dollars from the general public to ultimately seed your startup, I'm sorry, but you have to be doxed. And if you have to basically launch your company outside of the US to be able to do that effectively, then that's the cost you have to pay. Because I don't think there's really anywhere else in the world or any other business opportunity where you can go and generate a few $1 million in seed capital fairly easily outside of crypto. I mean, let's be honest. But if you want that privilege and you want that ease of access to capital from all of the people that are going to believe in you, then you need to give them a reason to believe. And it's ultimately another element of why I've started the Crow Score. And I'm making a lot of advancements here. We've got a Crow Score coming that I'm going to kind of show everyone here soon. There's a questionnaire we have to send to the client and everything. There's a lot to it initially. It's going to get easier and quicker, and we're going to start, cranking out more and more of them after the first few. But that's the whole thing behind Crow Score, is to get a lot of these companies to basically start. We consider it a very significant, a good faith offering to the public. This is us. We're not hiding anything. We're providing everything necessary to establish a firm Crow Score based off of all of the metrics and all of the things we ask the team for. We ask them whether they want to be doxxed publicly or not. You got to be doxxed to us. We got to know that you're real people and that we have an opportunity to look and and kind of know your background, and that's only fair. If you're looking for millions of dollars, you need to be more transparent, and that's really all there is to it. And so, yeah, I mean, I agree with a lot of this stuff and these proposed changes. But when I'm reading through these, where I'm puzzled is, and I genuinely do want to know, if there's something like this from the left, send it to me, send me a link, tell me where I can find it. Because all of this stuff feels like common sense type stuff that should be benefiting the people, benefiting the public. But we know that the left loves bigger government. They love higher taxes, bigger government. It's like, it's crazy. And the right seems to like having a little bit less government, lower taxes, but people doing things better with what they are given. And it's kind of like, stop all the wasteful spending. Let's bring this down, lower the taxes on the public, which then pushes for more business to take place, and everybody's better off from it. And that's the kind of seems to be the difference in approach between the two sides. And so I'm curious, how would a left-wing proposition be different than what I just read? And is it something that we could also all agree on? Is it is it in the interest of the people genuinely, or is it just to basically make things bigger, more expensive, and more troublesome and cumbersome and difficult to navigate the way it's been, ultimately since the beginning? So ultimately, I mean, all I have to say is everything that I just read here, I'm like, okay, yes, please. Thank you. That would be wonderful. Let's figure all this stuff out and try to figure out a way to work together and to make some of these things happen, at least as it relates to crypto. This is a 1,000-page book. If you're interested, just look it up. I mean, you can read it. It's like over 900 pages. So it's literally the policy proposals for just about everything that has to do with a presidential administration and what they believe that a presidential administration should be looking into. And apparently, based off of what I've read, there are a lot of former presidents that have adopted a lot of the policy procedures and things that have been presented by this group that puts out this book. So if you're interested in learning more, in more detail, like what is being proposed and what could be changing in the very near future if things were to go that direction in 2025, well, there you go. Check that out, and it's happy reading, because there's a lot. If you read fast, then more power to you. But until next time, thanks for joining me. Make sure you check out my locals. Even if you want to just set up an account on my locals as a free for free right now, and then kind of get an idea as to the flow of content and what I'm putting out there to maybe decide whether or not it's of interest to you to become a paid member. That's cool. I'm happy to have you. My I think I'm hitting puberty. I think my voice is cracking. But anyway, I appreciate you guys. I will see you soon. Until next time, crow your coins.